I'm Sarah, a tutor at Accountancy Learning, and in this video I'm going to take you through the Level 3 Financial Accounts AAT Sample Paper 1 Task 4. So let's have a look at this task. So this task is about producing financial statements for sole traders and partnerships. And we're going to have a task A and task B. So the first part of task A then is to identify whether each of the following transactions would lead to an increase in the owner's capital. So what do we mean by capital? So capital is the investment by the owner to finance the business. So we need to have a look at each of these transactions and then decide whether that's going to increase their investment in the business or if it wouldn't increase it. So the first one we're given is drawings. Now, drawings are in fact the opposite of capital. So capital is that investment in the business, and drawings is when the owner draws out from the business. So that would actually effectively reduce the capital. So for the answer to this question, it would be that there's no increase in capital. For the second one then, we're told a loss for the period. So when a loss has been made, it means that that isn't going to increase the capital. The reason for that is when a profit is made by the business, that's then what the business owes that owner. So therefore, it would increase the capital. So a loss for the period would not increase the capital. It would, in fact, have the opposite effect. An injection of capital by the owner. So this is where the owner's putting in more money. So this would increase our capital. We're injecting more capital, so therefore there would be an increase. And the last one there then, the owner putting his laptop into the business. So this isn't about putting cash into the business. This is actually about putting assets into the business. So that laptop would then show as part of the non-current assets on the statement of financial position, which means it would increase the capital as the owner is still investing into the business. He's putting that laptop into the business. So that's the first part of task A. In part 2 then, we are asked to identify whether the following statements about statements of financial positions for partnerships are true or false. The first statement we are given is a credit balance on a partner's current account means that the partner has drawn out more than his or her share of the profits. Now, when we look at the current account, when we're looking at that, if you imagine your T accounts, when you're looking at the current account, you're looking at it from the business perspective. So if you've got a balance on the credit side, then that would mean that it would be a liability of the business. So therefore that they have to make payment out at some point. So if there's a credit balance on the partner's current account, it would mean that that's where all the profits are sitting, because that's effectively what the business is going to be owing that partner. So if they've drawn out more than his or her share of the profits, the balance is actually going to be a debit balance, because actually the owner then ends up owing the business. So for this particular statement, it would actually be false, because the credit balance on the partner's current account would mean that the business owes the partner money. So therefore they haven't drawn out more than what they own or more than their share of the profit. The second one then, the financed by section of a partnership statement of financial position includes the balances of the partner's capital account and current accounts. So the answer to this is true, and that's because the current accounts are the day-to-day transactions that affect the financing of the business. And the capital account will be the original amount invested plus any permanent changes. So for example, the owner, the partner, puts in more money. So both of those added together makes up that financed by section at the end of the statement of financial position. Now, moving on to task B, we are given quite a lot of information. So we are told that Imran and Nancy run in hotels as a partnership. We're given their trial balance as at the 31st of March 20x8. And we are also given a number of different pieces of information down here as well. And we've got some interest calculations given to us too. Now, importantly, when you're in your exam, you will be able to open this information on the right-hand side by clicking the References button. And what that will do, it will automatically split your screen and you'll have the question on one side and then you'll have this information on the other, so it's easier for you to read. So let's have a look at what the question's going to be and then we can dive into our information to see what we need to use. So the first part then is to complete the following statement of profit or loss for the year ending the 31st of March 20x8. All numbers should be shown to the nearest pound. Profit should be shown as a positive and losses should be shown using a minus sign as a negative. But importantly, all other figures should be shown as positive. So just looking at this statement of profit or loss, we can see that in the question, we've already been given our sales revenue figure. So now we need to have a look at what else we're going to be putting in our statement of profit or loss. So let's go back and have a look at our trial balance. So when we're looking through our trial balance, we want to identify, is it an asset or a liability, capital or drawings, in which case it's on the statement of financial position, or if it's anything related to your income and expenses, then it'll be on your statement of profit or loss. So looking through these first few up here, bank, capital and current accounts and cash. Now, all of those will actually be on the statement of financial position. So for the first part of this question, we don't need to worry about them. Now, our closing inventory here, this is going to show as a debit on our statement of financial position as our assets, but it's also going to be a credit on our statement of profit or loss because it's part of the cost of sales formula. Then the closing inventory here is going to be what I've just mentioned on the statement of financial position. And the next one that we've got is depreciation charges. So depreciation charges are an expense to the business. We've got discounts received, which is we've been given a discount by a supplier, so it's kind of like a form of income. So that's also going to be on our statement of profit or loss. And then these next few here are the drawings, which will be on the statement of financial position, so we don't need to worry about that. And then we've got irrecoverable debts, and that's going to be the cost to the business of writing off any particular debts. Then next we have our assets here. So we are going to have our vehicles at cost and the accumulated depreciation. That is on your statement of financial position, so we're not going to highlight them as part of our statement of profit or loss. Then you've got opening inventory. So remember, it's our closing inventory that appears on the statement of financial position and the statement of profit or loss. But our opening inventory needs to appear on our statement of profit or loss, again, as part of the cost of sales formula that we use. Next, we have other expenses. So that's an expense to the business, so that's going to affect our statement of profit or loss. Now, prepayments is on our statement of financial position. That doesn't affect our income or our expenses. That sits as part of an asset. And then we've got purchases. So that's going to be part of our statement of profit or loss. The sales revenue, which is already given in the answer to the question anyway, the exam's already put that in for us. And then those final two there, trade payables, trade receivables, would be on the statement of financial position. So let's have a look again at our statement of profit or loss here. So when you're looking at this, in the exam, you will be able to click on the drop downs to select the description that you want. So when we're looking at this, we've now got 3 lines at the top here, and then we've got cost of sales here. So let's just revise what our cost of sales formula is. So it's going to be our opening inventory plus our purchases less our closing inventory. And that gives us our cost of sales. So this figure here is going to be our cost of sales figure. So these 3 items at the top now need to incorporate these 3 here. So we're going to have our opening inventory. We're going to have purchases. And we will have our closing inventory. So you would be able to now see these figures in the references on the right-hand side in the exam. So I can now put these figures in. And it's really important to remember here that when you're looking at your cost of sales figure, that the closing inventory is a minus. However, in the question, the only figure that should be entered as a minus is a loss if we come to a loss at the end of our statement. We are told that all other figures should be shown as positive. So although our calculation for the cost of sales is going to be adding these 2 together and minusing this one, we don't put the negative figure in the closing inventory figure in the actual question. And then once you've done your calculation there, you will then have 214,870 as your cost of sales. So now the next bit for your gross profit. So your gross profit is going to be your revenue minus your cost of sales. And that will then give you a total of 1,438,210. So that's this figure less this figure. Now, next we've got an add line. So when we look back at our statement, our trial balance for our statement of profit or loss, we can see that we have some income here. So when we've received a discount from a supplier, it's effectively a form of income to us. So we're going to add that to our statement of profit or loss. So we're going to say discounts received 570. Now, remember, in the exam, you will have the drop down. So if at any point you're a little bit confused, or perhaps you're having one of those moments where everything sort of goes blank and you can't remember what you're meant to be doing, you know, those exam nerves and anxieties are sort of taken over a little bit, then do have a look at the drop downs that you're given. Do any of them make sense? Can you use a process of elimination? Because sometimes that can actually then jog you back into remembering the process, what you're trying to do. And always try to answer a question. Don't leave any questions blank. If you leave it blank, you'll definitely lose the mark. If you answer it, then there's a chance that you will get the mark anyway. So we've done our add side, which was our discounts received at 570. And now we need to have a look at what we're going to be taking away from that. So what is going to decrease our profit? So again, let's have a look at our trial balance. So we decided that our irrecoverable debts is going to be an expense. Our other expenses is going to be an expense. And our depreciation charges was an expense as well. So we're now going to be putting these figures into the statement of profit or loss. So we're going to less our depreciation charges, which is 92,590. We're going to also take off our irrecoverable debts because we're not going to get that back. So that is an expense to the business of 1,390. And then we also have that other expenses, which is 1,267,597. Now, in the exam, this box here is going to auto sum. So once you've finished, you should have 1,361,577. So that would auto calculate as you type in the rest of the numbers. So now we need to work out whether we've made a profit or a loss for the year. And remember, if it's a loss, we're going to show it as a negative figure. So we would now take our gross profit figure and we're going to take off the total expenses here, which would give you £77,203. So if you look, our gross profit is higher than our total expenses. So therefore, we've got a profit for the year. So we leave it as positive. The next part of the question then is to complete the appropriation account. So this is where we're going to be using the different information given in the first part of the question. So again, have your references section open so that you can see it. So we need to complete the appropriation account, and we're told all numbers should be shown to the nearest pound. Profit figures should be shown as positive. Loss should be shown using a minus sign as a negative. So again, just like previous section, all other figures should be shown as positive. And importantly, don't miss this out in the exam. If any figure is 0, enter 0. So the first thing we're going to look at is to put in our profit or loss for the year. So we are now going to do that based on what we got on our statement of statement of profit or loss. So we had a profit, so we're not going to put it as a negative. A profit shows as positive. So we're going to pop that figure of £77,203 into our profit there. Now we need to have a look at the information that we were given. So again, just as a reminder, have it in the references so you don't need to keep scrolling up. So we've got a profit share ratio of 60-40, Imran to Nancy. Imran is entitled to a £25,000 salary, but Nancy doesn't get a salary. And then we've also got the interest on capital and drawings down here as well. So let's go down. Now, adding to the profit for the year, we're going to be adding on interest on drawings. So again, you're going to have the options for the drop downs. So you're going to add on interest on drawings. Now, in the information above, we were told that Imran was 141 and Nancy was 41. So we've got a total of 181, 82. So there's one of two ways you can do it. You could either do what I've just done there, added them together and put it in as the total, or you could put them in separately and then add them together so that you've got your total. Now, there's nothing else to add to the profit. So we do need to make sure that because we're going to add up all of this totals column, we put a 0 in that box. So then what we're going to do is then have a look at what we're going to take away. So we're going to have partners' salaries, and we're going to have interest on capital. So Imran had a £25,000 salary, but Nancy wasn't entitled to one. So we can complete that top line. And we were told in the question above that our interest on capital was for Imran 10,525 and Nancy was exactly the same. So again, just like before, you can add them together here and put your total in, or you can put the individual figures in first. So now we need to do that calculation to work out what profit is available for distribution. So 77,203 was our profit. We're going to take off that £182. We're going to add on the £182. Then we're going to take off the partner's salary and the interest on capital, which gives us 31,335. So we add our interest on drawings and we take off salaries and interest on capital. Then the next thing we need to do is work out how much of the profit Imran and Nancy are going to get. So we were told it was a 60-40 split, Imran, Nancy. So for Imran, we're going to work out our profit for him and also the profit for Nancy. So it's simply taking 60% of that profit is going to Imran and 40% of the profit is going to Nancy. And now when you add these two figures together here, you should have the same figure as up here for your profit available for distribution.